Welcome to Supernova Stock Watch. Going to look at 6 ways rich people use debt to make money. The rich take advantage of these resources. You should too. Debt is often a word that we're scared of. There are an excess of TV shows, books, and magazines which teach people on how to get rid of debt. While debt can be seen as a negative measure, it can also be positive if used correctly. The best way to use debt as investments is to leverage them. Leverage makes it possible to increase the return you make on an investment, sometimes exponentially. What is leverage? In general, leverage means using money that has been borrowed in order to get a big return. Leverage can give you the potential to make gains, higher profits, that were previously unimaginable, but at an increased risk of having all your money taken away. Here are 6 ways that debt can make you richer. First way to use debt is known as margin investing. Margin trading is a way to invest in the stock market with borrowed money. For example, if you had $50,000 in your regular brokerage account, you could leverage it through a margin account and invest more than that. By holding a margin account, you can be using up to 50% of the purchase price of a stock. So, at the max, you would have $50,000 in cash and an extra $50,000 that has been loaned to you by the broker. Your $50,000 investment gives you the opportunity to buy twice as much stock for the same price. If the stock price appreciates, you can pay off the loan and keep the profit. The pitfall is, if the stock falls below a certain value, your broker may take action to take their loan back, which is called a margin call. If you're failing to meet your margin call because you can't provide enough funds, your broker can liquidate all of the stocks in your portfolio and leave you with severe losses. Another option when looking at the stock market and using a form of leverage and debt combined is with leveraged ETFs. Profits from leveraged ETFs can be multiplied many times over, so it's easy for traders to amplify their returns. Investors can either go long or short on a certain index when using these funds, and some major players in the industry have leveraged ETFs that allow particular actions to be taken up to 200 or even 300%. These funds let you invest in specific indexes, bonds, commodities, or sectors. You can take a conservative or risky approach and use leveraged ETFs to boost your portfolio. With a bit of luck, you could see substantial profits with this investment. Leveraged ETFs can work for you, and work against you. They're not as useful if you can't trade them well, so be careful. If you want to invest in these types of ETFs, don't invest too much. It's easy to lose a lot of money in a short amount of time with leveraged ETFs. Third on the list using debt and leverage are with hedge funds. Hedge funds are a big use case for leverage, and they have been famous for making abnormal returns. In most cases they use up to 10 times more leverage than their total assets. Billionaire hedge fund managers like John Paulson have used leverage to turn accredited investors into multimillionaires. However, if the fund manager's investment thesis is wrong, this often causes a hedge fund to fail, which can cause investors to lose their capital. Hedge funds such as Long-Term Capital Management, LTCM, which needed a bailout, were levered up as much as 30 times their assets. Another way to use leverage and debt is with short selling. Have you ever watched a financial program on TV and heard that it's time to short the market? A popular way of betting against certain securities is by borrowing shares from an investor and selling them in hopes that the prices for those securities will go down. Short sellers have made a fortune by properly timing declines in stock prices. The downside to short selling is that losses are unlimited, which means you can lose much more than the initial investment. The 5th way to leverage your investment dollars is with forex trading. Forex trading has a lot of benefits for investors. For example, you can control large blocks of currencies with just a small amount of money and leverage your account to make your position even stronger. The fact remains that the pros of forex trading are obvious. You can take a small amount of money and turn it into something significant. In the foreign exchange markets, leverage is commonly as high as 100 to 1. This means that for every $1,000 in your account, you can trade up to $100,000 in value. Many traders believe the reason that forex market makers offer such high leverage is that leverage is a function of risk. George Soros is known as the man who broke the Bank of England, which led him to make over $1 billion in profit. However, his currency trade was also incredibly risky, and he could have lost everything in a matter of minutes. Coming in 6th on the list using debt as a leverage is with real estate. There are a lot of opportunities to make money from real estate investing. When you invest in real estate, everything is about making smart decisions and taking calculated risks. One of the smartest decisions and most strategic risks you can make is called leveraging. Using leverage can have a huge impact on your property investment, so it's important to know how to use it. The most common way to leverage a property is by taking out a mortgage from the bank and borrowing an amount of money. Let's say you buy a rental property for $100,000 and you rent it out at $1,000 per month. You decide not to leverage the real estate and make an all-cash purchase. After paying property taxes, insurance and miscellaneous expenses, and assuming the cost is $300 each month, you take home $700 every month of that $1,000. You have $700 a month in cash flow. Now let's look at the same property and decide to finance the property with a conventional mortgage, using 20% of your total cash as a down payment, which would be $20,000. You pay the same expenses every month as you would with the all-cash purchase, but now you also have a mortgage to pay off. If you're paying each month with a 5% interest rate, you're making a mortgage payment of roughly $430 per month. Instead of taking home $700 per month as with the all-cash purchase, you're taking home $270 per month. It seems like you're making more money with the all-cash purchase, taking home $700 per month instead of just the $270. If you think the all-cash investment is the obvious answer, think again. The idea of using leverage when investing is to know how much cash you are making in relation to how much cash you initially invested. This is determined using the cash-on-cash equation. The first option, which was to buy the house with your $100,000 savings, netted a monthly income of $700 after expenses. To get your annual net income, multiply by 12. Then divide it by your initial investment of $100,000. With the second option, which you leveraged your money with a loan, netted a monthly income of $270 after expenses and mortgage payments. Again, multiply this by the 12 months in the year for your annual net income. Then divide it by your down payment of $20,000. With a leveraged purchase, you're making 16.2% cash-on-cash return. In the all-cash scenario, you spent $100,000 of your own money. In the leveraging scenario, you only had to spend $20,000 of your investable money. As far as growing monthly dividends, using the leverage option doubled your return. If you purchased 5 properties, each with a $20,000 down payment, and each property you collected the same $270 every month, your monthly cash return is going to be $1,350. But remember, this scenario isn't a perfect world. The worst case scenario is foreclosing on a property. When you lose a property, you lose your down payment, which also brings down your credit score. This can be scary, but it isn't the end of the world. Going against the traditional wisdom, debt can actually be a great tool because it allows you to make purchases that you would otherwise not be able to. Plus, if you manage it correctly and responsibly, the debt can actually help enhance your financial status. Let me know what you think about using debt as leverage for an investment strategy. I enjoy sharing my insight with you and helping both of us become a better trader and investor and finding some level of success. You have made it to the end of my video. Thank you for watching. Please check out my other videos and also check out the description for great deals and sign-up bonuses.